And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures trading family. It is Capital of Preservation Friday. This is the market forecast for Friday, December the 2nd. My name is John Hoagland. Thanks again for trusting me with your time. I hope you've had a good week. Hopefully you have protected yourself from this morning's big fast moves after the unemployment numbers came out. As always, we're going to be focusing on accurate context, good risk management, and patience. Hopefully, if you were in this market this morning, you were the right way. Otherwise, you've probably had a pretty tough morning already. This move and this information has further complicated our opportunities for today. It doesn't mean that there's not good opportunities. Just try and stay patient. Remember, there's probably a lot more risk this morning than the atypical morning. 7:30, the unemployment numbers came out. Unemployment remains at 3.7%. Non-farm payrolls, 63,000 more than they were expecting. Now, why did the markets break? Well, the Fed is hoping that employment will slow down, not speed up, because they're looking to cool the economy. More people working, more people spending money, higher inflation. So now, is that going to change their narrative from 50 basis point rate hike in December here? Or are they going to look more towards 75? We've had a lot of soft talk from a lot of the talking Feds this week, obviously on Wednesday. Chairman Powell said a few things that sent the market skyrocketing upwards. Now it seems to be going in the opposite direction with some information today. We do have a couple of talking Feds speaking throughout the day today. 8:15 this morning in Central Time. Barkin will be barkin'. 9:15 Evans is due to speak, and he's due to speak again at 1 p.m. all Central. As far as other economic numbers this morning, everything that we were expecting to come out has come out. So this morning, stocks seem to just be waiting patiently for the unemployment numbers today, keeping things pretty close to settlement, largely unchanged before the numbers came out. But again, as we always say here on the market forecast and everything we do, anything can happen, and usually will. So, when the markets were pretty much steady before the number came out, we've got the NASDAQ down over 2%, the S&P down 1.5%, the Dow down 1.25% right now. We've got gold down 1.25%. Everything I'm seeing on my quote board here is in the red. So we've got things heading lower, at least initially in the day today. Some news in crude oil. The European Union is closing in on a $60 per barrel price cap on Russian oil. OPEC's going to be meeting, OPEC Plus, which Russia is part of, is going to be meeting on Sunday. We'll see what they come up with about that. Now, it's not that they can force Russia to sell crude oil at $60. It's that Europe can they can withhold services like insurance and equipment to anybody who purchases Russian oil for more than $60 a barrel. Who knows how this is going to work out? As far as the VIX this morning, had a nice jump higher, 2050 up 3.5% last I checked. The dollar index also a big jump to the upside, 105.50, and the yield on the 10-year also with a move to the upside after the unemployment numbers came out, 3.6%. As always, like, share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel and so you get notifications when we do go live. And again, Happy Friday, happy Capital Preservation Friday. If you've had a good week, volatility is around today, so make sure you be careful. Make sure you preserve at least some of the profits that you've accumulated this week. That's the goal, right? Is to end each day a little bit better than we started it, end each week a little bit better than we started. And it is always a challenge to do so. It's never going to be easy. Sunny is the first one in the room today with a quote for us. I like this one, coming from a long line of procrastinators. You cannot escape the responsibility of tomorrow by evading it today. Abraham Lincoln. Dimitar, good morning. Dan Trader, Terry King, Shaw, Timothy, Naztic, Caprice, Spencer, good to see you here. Bill, Scott Sawney, Concord, Jules, Hegel Matters, Marcelo, Caesar, Theo, good morning. Alfred, hey, Randolph is here. Good morning, Rick. Love you. Vince, good morning. The rooster crowing. Must have the chicken flu this morning. Woke up with a fever. Just going to watch today. Good idea, Rooster. If you're not feeling 100%, sometimes it's a better idea just to put the mouse in the drawer, even take the batteries out of it, so you're not tempted to get into something kind of secondary or lower in your strategies. George Duque, good morning. Keith, good morning. JM, Dr. VJ. Don't feel trading this today. I don't feel trading it today either. I'm going to really try and stay patient, wait for some sort of structure to come to me in the day time frame. We're going to see on the charts where we have gone, especially in like the NASDAQ and the S&Ps, because we had a very specific level, the base of the late spike yesterday. But is it truly the base of the late spike? Going to be opportunity. If I do trade today, I'm going to trade small. I'm probably going to have to risk a little bit more per contract, so I'm going to trade a little bit smaller. If I do anything at all, I don't have to do anything today, and I can still call myself a trader. Isn't that amazing? Sarah Hall, good morning to you. Prayers and love. Joel, good morning. ZK Captain went home short the ES last night. Nice job, Rick. Well, you're sitting pretty right now. You're buying tonight, Randolph. Captain Price, it's inverse news. Right. What would normally be viewed as good news in this current situation isn't necessarily good news. DA, JD, good morning. Anissa, Alejandro. Captain, good morning, Captain. Just don't go long. Captain Morgan Price, Jay, David, Dead Letter Opener. Hey, it's good to see you. I haven't seen you for a while. Daily yesterday was potential trend short pivot, so we'll see. D. Leal, our performance computers actually necessary for trading? Are you a highly active trader? Are you going to be, expecting low latency? It really depends on who you are as a trader. Versus major resistance. Rusty Golfer, my spirit animal. Good morning, all. Been a good week. Patience pants on today. Very good. Captain Price. Yes. All right. So keep reminding myself, patience pays. Especially when we see these markets in a volatile state like this. We're going to take a look at the charts here, and so much has changed in the last basically half hour since the non-farm payrolls comes out. I don't think that I'm smart enough to really come up with any sort of true strategy that I think is going to pay me over a long period of time when these releases come out like this. I've had a lot of positions into a lot of economic numbers. And like I tell everybody, if I were to add up the profits and losses, I'm about even. So I don't hold positions into them. I will let the dust settle and look for my opportunities as the day goes on. Good morning, Joe. He's got a hypothesis for us. Look for responsive trade higher to the bottom of regular trading hours yesterday and overnight low volume note at 35.36. Look for short for trend day down to make those longs all suffer. And we, I believe, do have a bunch of trapped longs at the highs. Now, if those are hedgers, if those are just traders hedging for this morning, the number this morning, they're not worried about the directional activity today. But if we have some larger speculators, smaller speculators, long from the last couple of days, it's going to be a tough day for them. So we've got delta divergences yesterday in gold and the euro. There's going to be some longs definitely suffering there. Let's jump into the charts and take a look. Let me bring up the daily here and we'll dive in. All right, you should be able to see the charts now. So Wednesday, Pow, right? Lots of good volume, big open interest increase on Wednesday. Yesterday, we lost 13,000 in open interest. So any speculators that wanted to be flat for this morning were probably able to do so. The open interest indicates some long liquidation yesterday. Okay, we were this morning inside extended trading hour range. That has now changed since the unemployment numbers came out. We're still looking at being inside the late spike. Now, we're going to take a look at something on the 30-minute chart, which we might find interesting. We know what the unemployment numbers have done early in the session today. So here we were in the overnight. The number comes out. We were calling the base of L period here, this gold line here, the base of the late spike. However, this market was seeking balance the whole way up. So this market could really come all the way back down to this level area down here, 39.60, 39.70, before I'll start to worry about any kind of market state change moving from medium time frame higher to anything to from back to balancing, or especially be worried about if we were to get below weekly kickoff low today of a change in market state. Okay. So we got a big range here in the overnight, big move to the downside. Well, I like Joe's idea of some responsive buying coming in, looking at this as a bargain, maybe bringing us back to the base of the late spike that we were looking at that we never got to yesterday. I think it's 40.44, and perhaps this might be an interesting level for us to look at. Now, Joe was talking about 35 to 36. In this area here, this high volume node, I think, is really what Joe is kind of focusing on. And I could be wrong there. And 35, 36 might be an opportunity for us there. So, it's all about the digestion of the unemployment release today. Obviously, the knee-jerk spin to the downside. What did we have as far as we had really positive delta yesterday, day before yesterday on this push to the upside, all time frames acting in concert. Yesterday, we had the market really kind of holding higher, losing open interest and delta kind of dropping as the day goes on. It was never really deep. So I don't think that there's any real good information from that in this time. Boy, it's going to be a challenging day. Try and stay patient. I like Joe's idea. Get some responsive buyers to come in, push price higher, get a high volume, low volume node entry, and see if you can ride the wave back to the downside. Yeah, P shape yesterday. Let's take a look at that on the TPO chart. Here's yesterday's profile. Relatively even, I think. Point of control is right at the center of the range. Here's today. Boom. All right. Take a look at crude oil as it gets ready to open the regular trading hour session. Okay, we had an inability yesterday to close above weekly kickoff high. This is kind of presenting itself as a degree of excess on the daily chart. We lost 5,700 yesterday, coming off of that high and closing back below weekly kickoff high. That open interest loss indicates some long liquidation or profit taking throughout the day yesterday. Volume wasn't all that tremendous. Take a look at the 30-minute chart. So the overnight pushed us higher. Basically, the regular trading hour session brought in sellers. You see we have negative delta here to about 5,000 by the end of the day, which is congruent with direction. Some long liquidation, pushing price back down below this important inflection level. We peaked above it. We're back down below it. We're going to open below it. We have opened below it. Do we have the opening range here? So the opening range is right here. High of it 81.30, low of it 80.93. So we're looking at a 37 tick opening range that has moved to the downside. Not really near any important inflection levels. However, maybe indicating seller control below weekly kickoff high. I think that weekly kickoff level is going to be somewhat pivotal for us today if it is reapproached. All right. NASDAQ. So, again, same story. Big volume on the upside. Yesterday, losing open interest. Volume coming off a little bit. Some long liquidation already yesterday and the move back down after the unemployment today. It's all about this release. It's, even if we have a hypothesis that says the market is going to break after non-farm payrolls this morning, where are your levels? Where are you going to have to try and stay patient? I'm certainly not going to be doing anything till the regular trading hour is open and all of the participants are available and able to affect the marketplace. I want all the information I can get from as many participants as I can before getting involved today. So I'm certainly going to be waiting until after the regular trading hour open. Here's the 30-minute chart. So last week's high was basically the low of the assumed late spike. I mean, technically, though, we're still in an upside late spike because the market, again, from 11, well, what was this? 12 o'clock, 12:30 on Wednesday was out of balance the whole way up. It is still marking acceptance of higher pricing in this big push to the upside. Yesterday was acceptance of higher pricing up in and above the late spike. So I'm going to be patient. I'm going to look for opportunities at the extremes of the initial balance. If we do get a pushback towards the last week's high, the base of the original late spike we were looking at yesterday, that could be an opportunity for us for an execution, if only to be able to limit risk. And I just might work on something else today. I don't know. I gotta watch and see. Yesterday, in gold, new business, new long bets. We added 13,000 in open interest. We had a negative 4,700 in delta by the end of the session yesterday. That is new, probably longer time frame longs. Those longer time frame longs are taking heat right now, but if they are again hedged, do they know? Do they care? Are they trapped up there? So, before the number came out, the overnight low was the weekly kickoff high, which was 1809, one of my old addresses. So we've got a pullback. On the daily, my whole moving averages are still upside. That we still haven't broken the upside momentum in the day time frame. Here's the 30. Right to a naked point of control that was run through. We can take this off now. We still have quite a gap down below, down to this range. Big gap yesterday. I'm going to extend this out. This is a visual target. And here we are in space. I don't want to fight directional moves. If I get later on in this session the opportunity on either extreme of today's day session range to look for opportunities, that's probably my best bet at being able to limit risk. Everything I do today is going to be more about how little can I risk than how much more can I make. Here's the euro. Same kind of situation, of course. We had a decent boost in open interest yesterday. As a matter of fact, quite a boost. 22,000 contracts added yesterday on decent volume on the breakout to the upside. Price is currently sitting at weekly kickoff high. Got to keep your eye on the U.S. dollar. The U.S. dollar took a pretty good jump after the non-farm payrolls numbers came out. It's come off its high since then a little bit, but they're going to be, inversely correlated, of course. Take a look at the 30. P-shaped profile indicating short covering, but with the boost in open interest, it's indicating new longs against Delta. Okay, we have a Delta divergence here. Price moved higher yesterday. Delta was negative and increasingly negative throughout the day. This indicates the possibility of longer time frame buyers. If that is true, at some point they may decide to kind of protect their positions, or they may get out. The weekly kickoff level right here, this is what we would expect, longer time frame participation to come into the marketplace. If it doesn't hold up here, are they going to capitulate? They're pretty quick to capitulate. The shorter time frame P shooters like me would be quick to capitulate, but they may protect this level. We're watching again as the day goes on for structure to form in the day time frame to limit my risk. Everything I do today is based on how little I can risk, more importantly than how much I can make. The 10-year, we had a nice jump in the rate. There's going to be a lot of narrative now or speculation that in 2 weeks when the FOMC meets, they may go from 50 basis points back to a 75 basis point jump because of unemployment today. They're looking for the economy to slow down and that unemployment number, while the rate remained the same. Okay, the rate is 3.7%. The non-farm payrolls and the private non-farm payrolls came out higher than expected as well. So we had an open interest increase yesterday in the front month. Overall, we lost 18,000, but we added 12,000 in the March contract. In this contract, we're still dealing with rollover blur with open interest and volume. Volume was pretty small, pretty low yesterday. We're probably going to usurp that today. We did not close the session yesterday, settle above 114.20. We were a half a tick below it. Check this out. Half a tick. We pushed up there, We closed a half a tick below it. We looked above it. We were above it when the numbers came out, and look where we are now. We've got lots of visuals down here with which to take a gander at. Don't fight directional markets. Whenever I say that, I put in a low or I put in a high. Natural gas. We added 2,500 in open interest on this push to the downside, not necessarily on the greatest volume. We're starting to think maybe we're going to be trapping some shorts down here, but we've got now some continuation possible. We're looking for acceptance below weekly kickoff low, 660. We're looking for acceptance, time and volume and momentum and participation. It's a four-legged table. You need all four of those to mark acceptance, and it's a very subjective thing. It's very difficult. Sometimes you think, wow, this is certainly going to be accepting, and it doesn't. Sometimes you think there's no way this is going to accept, and it does. Here's the 30-minute chart. Completely different market than any of the energies. So we've opened now below weekly kickoff low. Is that a sign of marking acceptance at lower pricing? I would go with yes. We are directional since we tested back to overnight inventory. Now we're seeing some continuation. I don't want to fight this directional market. That's one of the biggest, I think, mistakes that discretionary traders make. Well, the market's too low to sell, so I guess I'll just have to buy it. And you buy it and you take it stopped out, and you buy it and you get stopped out, and you buy it and you get stopped out. And then you start to think, well, if I sell it now, I'm probably going to be selling the low. So you buy it again and you get stopped out. It's only when you give up will the market turn and go in your direction, it seems. Trading directional markets is difficult. It's been one of the more difficult parts of trading in my history is when you've got a market that's directional in the day time frame, to try and jump in on it is one of the more challenging things that I've been consistently trying to work on for 30 years. It's never easy, right? All right. This is it for the week. No recap today. It's Friday. We are looking forward to your success, so be patient today. Look for your A game. Bring your knowledgeable trader with you. If you're not feeling well, don't worry about not trading today. You're still a trader. A lot of folks think, well, if I'm not doing anything, then I can't call myself a trader, and I want to be a trader. I am a trader. So you don't have to worry about trading every day. If you're not feeling it, if you're not feeling well, definitely give yourself a 3-day weekend. Watch. Like I said, take the batteries out of your mouse. All right? Take your deep breath, ladies and gentlemen. That always feels good. I hope that you guys actually do that with me. Stay humble, grateful, and creative, and centered in your trading today. If you find yourself becoming emotional or angry, it's going to be very difficult for you to make good decisions as far as trading is concerned. So give yourself some time. Let that venom go. Maybe take the day. You know, there's always next week. The thing about this is our opportunity-making machines, day over day and day after day, we get these opportunities. And I think we are really blessed. It's one of the things I was thankful for last week was the fact that I get to do what I do. All right, so let's get down to business. I'll see you in the proverbial trading pit here shortly. Have a great weekend, and we'll see you Monday morning at 7:45 for the market forecast. If you do have trading-related questions, I don't really have the time to do that much of that in the forecast or the recap. Come to group coaching Monday and Wednesdays, 12:30. You can even email me your question so I can prepare for it. Email me at jhoagland, JHOAGLAND, @topstep.com, and I'll be happy to address any of your questions. Nobody knows everything. I know I certainly don't, but if something we don't know, we're going to tell you, and we're going to learn together. Have a great weekend. Be kind to yourself. Be kind to others. Say a prayer for peace, and I'll see you on Monday.